Welcome to Simple Investing Secrets. In today's video, we'll review 12 safe healthcare dividend stocks to buy now. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. People invest in dividend stocks for several reasons. One reason is that these stocks can provide a regular source of income in the form of dividends, which are payments made by the company to its shareholders. This can be especially appealing to investors who are looking for a way to generate a steady stream of income from their investments. Additionally, dividend stocks may be seen as a safer investment compared to other types of stocks, since companies that pay dividends are often more established and financially stable. This can provide investors with some peace of mind, knowing that their investment is less likely to be impacted by market volatility or other factors. Finally, many investors view dividend stocks as a good long-term investment, since they can provide both income and the potential for capital appreciation over time. Safe defensive stocks are those that hold up well during periods of economic downturns. The healthcare sector is considered one of the most reliable defensive industries because these companies benefit from growing consumer demand regardless of the overall economy. The onset of the pandemic of 2020 has shifted the dynamics of the global healthcare system. The healthcare industry in the US is the biggest in the world, accounting for over 17% of the national GDP in 2020, according to a report by Insider Intelligence. The report also referred to the data by Deloitte and mentioned that health spending in the US will reach $8.3 trillion by 2040, up from $4 trillion in 2020. Over the years, the healthcare industry has generated solid revenues in the US. CNBC cited data from McKinsey & Company and mentioned that the sector's earnings are projected to grow 6% annually from 2021 through 2025, producing an additional $31 billion in profits. The same report mentioned that various healthcare companies in the US have given positive growth outlooks for the next few years. This year's economic chaos also couldn't target the sector as harshly as other industries. The S&P 500 Healthcare Index is down by 2.36% year-to-date, versus a 17.97% decline in the broader market, as of December 12, 2022. The index gained 9.6% in October, recording its best month since April 2020, as reported by Bloomberg. Another report by AllianceBernstein stated that healthcare stocks have significantly outperformed in down markets from 2000 through June 2022. The solid performance of healthcare stocks can also be attributed to the fact that many health companies are dividend payers. Historically, dividend stocks have proved their mettle in periods of an economic clampdown. Companies like ExxonMobil Corporation, Kimberly-Clark Corporation, and the Coca-Cola Company gained investors' attention due to their strong dividend growth track records and solid returns this year. These companies have shown strong performance this year and have solid credentials. With that said, let's review our 12 safe defensive healthcare dividend stocks to buy now. Number 12. McKesson Corporation, ticker, MCK. Dividend yield as of December 12, 0.58%. McKesson Corporation is a Texas-based company that distributes pharmaceuticals and provides healthcare management tools. In fiscal Q2 2023, the company reported revenue of $70.2 billion, which showed a 5.4% growth from the same period last year. For the first 6 months of the year, it generated over $166 million in operating cash flow. The company paid $139 million in dividends to shareholders during this period, which places it as one of the best dividend stocks on our list. McKesson Corporation currently pays a quarterly dividend of 54 cents per share and has a dividend yield of 0.58% as of December 12, 2022. The company has been raising its dividends consistently for the past 6 years. Its strong cash position makes it a good investment alongside other dividend stocks like ExxonMobil, Kimberly-Clark Corporation, and the Coca-Cola Company. Cowen appreciated the underlying business of McKesson Corporation in November and raised its price target on the stock to $416 with an outperform rating on the shares. At the end of Q3 2022, 51 hedge funds tracked by Insider Monkey owned stakes in McKesson Corporation, up from 47 in the previous quarter. 11. Elevance Health Incorporated, ticker, ELV. Dividend yield as of December 12, 0.98%. Elevance Health Incorporated is an American health insurance provider and also offers other medical services to its consumers. The company was previously operating as Anthem and changed its name to Elevance Health in June this year. It currently pays a quarterly dividend of $1.28 per share for a dividend yield of 0.98% as of December 12, 2022. The company is one of the best dividend stocks on our list as it has raised its dividends for 11 years in a row. In Q3 2022, Elevance Health Incorporated generated $39.6 billion in revenue, up 11.5% from the same period last year. The company's operating cash flow came in at $4.9 billion, an increase of $2.4 billion from the prior year period. During the quarter, the company also paid $306 million to shareholders in dividends. In October, UBS raised its price target on Elevance Health Incorporated to $610 with a buy rating on the shares, following the company's Q3 earnings. The firm also mentioned that the company's commercial book is not seeing signs of a recession. As of the close of Q3 2022, 71 hedge funds tracked by Insider Monkey own stakes in Elevance Health Incorporated, with a total value of over $5.3 billion. Number 10. Eli Lilly and Company, ticker, LLY. Dividend yield as of December 12, 1.09%. Eli Lilly and Company is a multinational pharmaceutical company that distributes its products to over 125 countries. In December, UBS raised its price target on the stock to $428 with a buy rating on the shares, highlighting the company's overall performance and its guidance for the full year. Eli Lilly and Company holds one of the longest dividend records, paying regular dividends to shareholders since 1885. Moreover, it has raised its payouts consistently for the past 8 years, which makes it one of the best dividend stocks on our list. The company currently offers a quarterly dividend of 98 cents per share and has a dividend yield of 1.09% as of December 12, 2022. Since the beginning of this year, Eli Lilly and Company returned 32.8% to shareholders, and its 12-month return stood at 45.2%, as recorded on December 12. At the end of September, 75 hedge funds in Insider Monkey's database own stakes in Eli Lilly and Company, growing from 70 in the previous quarter. These stakes have a collective value of over $5.4 billion. With nearly 4 million shares, Fisher Asset Management was the company's leading stakeholder. Number 9. United Health Group Incorporated, ticker, UNH. Dividend yield as of December 12, 1.22%. United Health Group Incorporated is an American multinational healthcare and insurance company. In Q3 2022, the company reported an operating cash flow of $18.5 billion, and its adjusted free cash flow came in at $8.8 billion. In the first 9 months of 2022, it paid $10.5 billion to shareholders in dividends and share repurchases, coming through as one of the best dividend stocks. United Health Group Incorporated has been making regular dividends to shareholders since 1990. It currently pays a quarterly dividend of $1.65 per share for a dividend yield of 1.22% as of December 12. Credit Suisse analyst AJ Rice lifted his price target on United Health Group Incorporated to $610 with an outperform rating on the shares. United Health Group Incorporated was not one of the most popular stocks among hedge funds in Q3 2022, as 110 funds tracked by Insider Monkey had positions in the company, up from 91 in the previous quarter. These stakes are collectively valued at over $10.3 billion. Number 8. Cigna Corporation, ticker, C. Dividend yield as of December 12, 1.35%. Cigna Corporation is an insurance company that mainly provides healthcare insurance services to its consumers. In the past 5 years, the company has raised its dividend at a CAGR of 151.2%, and its dividend growth streak currently stands at 2 years. It pays a quarterly dividend of $1.12 per share and has a dividend yield of 1.35% as of December 12, 2022. Since the start of the year, Cigna Corporation delivered a 41.8% return to shareholders, and its 12-month return came in at 54.3% as of December 12. In the third quarter of 2022, Cigna Corporation reported revenue of $45.2 billion, which showed a 2.2% growth from the same period last year. Its shareholders' net income for the quarter came in at $2.8 billion, and its adjusted income from operations stood at $1.9 billion. In November 2022, Morgan Stanley assumed its coverage on Cigna Corporation with an overweight rating and a $347 price target, up from $318. The firm mentioned that the company offers a unique investment opportunity and appreciated its solid earnings. The number of hedge funds tracked by Insider Monkey owning stakes in Cigna Corporation jumped to 76 in Q3 2022, from 66 in the previous quarter. The collective value of these stakes is over $3.11 billion. Number 7. CVS Health Corporation, ticker, CVS. Dividend yield as of December 12, 2.16%. CVS Health Corporation is an American healthcare company that owns retail pharmacies and also provides healthcare insurance services to its consumers. In Q3 2022, the company reported revenue of $81.2 billion, which showed a 10% growth from the same period last year. Year to date, the company generated $18.1 billion in operating cash flow. During the quarter, it paid $726 million to shareholders in dividends, which makes it one of the best dividend stocks on our list. CVS Health Corporation currently offers a quarterly dividend of 55 cents per share and has a dividend yield of 2.16% as of December 12. Morgan Stanley initiated its coverage of CVS Health Corporation with an overweight rating and a $119 price target, highlighting the company's long-term performance. At the end of Q3 2022, 67 hedge funds tracked by Insider Monkey owned stakes in CVS Health Corporation, up from 65 in the previous quarter. These stakes have a consolidated value of $2.1 billion. Number 6. Cardinal Health Incorporated, ticker, CAH. Dividend yield as of December 12, 2.56%. Cardinal Health Incorporated provides cost-effective treatments to its consumers and also deals in other medical products. In November, Credit Suisse raised its price target on the stock to $79 with a neutral rating on the shares, appreciating the company's performance and balance sheet. In fiscal Q1 2023, Cardinal Health Incorporated generated $49.6 billion in revenues, up 13% from the same period last year. The company had $3.5 billion available in cash and cash equivalents at the end of the quarter, and its total assets stood at over $43.3 billion. Cardinal Health Incorporated is a dividend aristocrat as the company has been raising its dividends for the past 36 years. It currently pays a per share dividend of $0.4957 every quarter. The stock's dividend yield on December 12 came in at 2.56%. The company is a good addition to dividend portfolios alongside ExxonMobil Corporation, Kimberly-Clark Corporation, NYSE, KMB, and the Coca-Cola Company. At the end of Q3 2022, 45 hedge funds in Insider Monkey's database own stakes in Cardinal Health, up from 44 a quarter earlier. The stakes owned by these hedge funds have a total value of over $1.03 billion. Number 5. Johnson & Johnson, ticker, J&J. Dividend yield as of December 12, 2.57%. Johnson & Johnson is an American leading big pharma company that specializes in medical devices and offers other medical services. The stock delivered a 2.45% return to shareholders year to date, and its 12-month return came in at 4.33% as of December 12. Johnson & Johnson is one of the best dividend stocks on our list as the company has raised its payouts for 60 years in a row. It currently pays a quarterly dividend of $1.13 per share and has a dividend yield of 2.57% as of December 12. In December, Morgan Stanley raised its price target on Johnson & Johnson to $178 with an equal weight rating on the shares, appreciating the company's decision to separate its consumer health segment into an independent company. As of the close of Q3 2022, 85 hedge funds in Insider Monkey's database own stakes in Johnson & Johnson, up from 83 in the previous quarter. The collective value of these stakes is over $5.4 billion. Among these hedge funds, Fisher Asset Management was the company's leading stakeholder in Q3. Number 4. Merck & Company Incorporated, ticker, MRK. Dividend yield as of December 12, 2.68%. An American multinational pharmaceutical company, Merck & Company Incorporated announced a 6% hike in its quarterly dividend to 73 cents per share. This marked the company's 12th consecutive year of dividend growth. The stock's dividend yield on December 12 came in at 2.68%. Its strong dividend history and dividend growth track make it one of the best dividend stocks in the healthcare sector. In Q3 2022, Merck & Company Incorporated reported revenue of $15 billion, which showed a 14% growth from the prior year period. It posted an EPS of $1.85, which beat estimates by 14 cents. In November, Credit Suisse initiated its coverage of Merck & Company Incorporated with an outperform rating and a $120 price target, calling the company one of its top ideas among the U.S. large-cap biopharma peer group. As of the close of Q3 2022, 82 hedge funds tracked by Insider Monkey presented a bullish stance on Merck & Company, up from 79 in the previous quarter. The stakes owned by these hedge funds have a total value of over $4.7 billion. Number 3. Pfizer Incorporated, ticker, PFE. Dividend yield as of December 12, 3.17%. Pfizer Incorporated is a multinational pharmaceutical and biotech company. It reported a strong cash position in its recently announced Q3 report. The company generated revenue of $22.6 billion, which beat street estimates by $1.5 billion. It also paid $6.7 billion to shareholders in dividends, which makes it one of the best dividend stocks on our list. Pfizer holds a 12-year streak of consistent dividend growth. The company offers a quarterly dividend of 44 cents per share and has a dividend yield of 3.17% as of December 12. Pfizer Incorporated was a part of 77 hedge fund portfolios in Q3 2022, up from 70 in the previous quarter, as per Insider Monkey's database. The collective value of stakes owned by these hedge funds is over $2.4 billion. Among these hedge funds, AQR Capital Management was the company's leading stakeholder in Q3. Number 2. Gilead Sciences Incorporated, ticker, GILD. Dividend yield as of December 12, 3.32%. Gilead Sciences Incorporated is a California-based biopharmaceutical company that specializes in the research and development of antiviral drugs. In December, Piper Sandler raised its price target on the stock to $104 with an overweight rating on the shares, highlighting the company's recent collaborations. In Q3 2022, Gilead Sciences Incorporated reported an operating cash flow of $2.9 billion and its free cash flow for the quarter came in at $2.7 billion. The company paid $928 million to shareholders in dividends and repurchased shares worth over $180 million during the quarter. Gilead Sciences Incorporated currently pays a quarterly dividend of 73 cents per share for a dividend yield of 3.32%, as recorded on December 12. The company maintains a 12-year streak of dividend growth. At the end of Q3 2022, 56 hedge funds tracked by Insider Monkey own stakes in Gilead Sciences, valued at $3.63 billion collectively. Number 1. ABBV Incorporated, ticker, ABBV. Dividend yield as of December 12, 3.63%. ABBV Incorporated is an American biotech company that was formed after the spin-off of Abbott Laboratories in 2013. The company is one of the best dividend stocks on our list as it has been raising its payouts consistently for the past 50 years. It currently pays a quarterly dividend of $1.48 per share and has a dividend yield of 3.63% as of December 12. ABBV Incorporated was a part of 80 hedge fund portfolios in Q3 2022, up from 71 in the previous quarter. The stakes owned by these hedge funds have a total value of over $1.86 billion. With over 3.2 million shares, Arrow Street Capital was one of the company's leading stakeholders in Q3. This concludes our list of 12 safe healthcare dividend stocks to buy now. Before putting your hard-earned money into buying stocks or investing in the market, you should always do your research. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.